Hey everyone, welcome back to Corporate Decoder, the place where we uncover the true stories behind the corporate jargon and financial statements. Today we're diving into a fascinating maneuver by Firefly Neuroscience Incorporated, and let's just say things are getting interesting with warrants and exchanges. If you like getting straight answers from complex documents, make sure you subscribe, and join our Discord community linked in the description for more exclusive content. So, Firefly Neuroscience Incorporated, or FFN, has filed a Form 8. Think of this as a public announcement of really important events that happen between their regular financial reports. This one specifically details a change in some of their outstanding warrants. The big news here revolves around something called a Warrants Cancellation and Exchange Agreement. Now, that might sound a bit scary, but let's break it down. Warrants are basically options for investors to buy a company's stock at a set price. In this case, Firefly Neuroscience had some warrants. Let's call them the June 2025 warrants. Issued back in June of 2025, these were for purchasing shares at either $3.5 or $4 per S-share. What Firefly has done is essentially swapped these older warrants for new ones called the new 2025 warrants. This exchange happened on the 16th of December 2025. The key thing here is the price. The company has issued new warrants that allow investors to buy their common stock at a much lower price of $0.5 per S-share. This is a significant adjustment and suggests the company is trying to make it more attractive for investors to exercise their options to buy more stock. The total number of shares these new warrants represent is 800,000, which is pretty substantial. Now, why would a company do this? Well, if all these new warrants are exercised, Firefly Neuroscience stands to bring in about $400,000. The company says this money will be used for working capital and general corporate purposes. That is pretty standard language, meaning they'll likely use it to fund their day-to-day operations, research, or maybe even other expansion plans. This whole deal makes a lot of sense when you look at the underlying goal. By lowering the exercise price from figures like $3.5 or $4 down to $0.5, the company is dramatically increasing the likelihood that these warrants will actually be used. Investors who might have thought the stock price was too high to make a profit with the old exercise prices now have a much lower bar to clear. This means more potential cash for the company, as investors are more likely to buy shares at this new, attractive price. It is important to note how this transaction is being handled. Firefly is conducting this as a private placement. This means they are not offering these new warrants to the general public, but rather directly to a select group of investors. The warrant investors, they are relying on specific exemptions under securities laws to do this. Essentially saying these are sophisticated investors who don't need the full registration process. This is common when companies are making adjustments to their capital structure or dealing with existing financial instruments. Firefly Neuroscience Incorporated trades on the Nasdaq capital market under the ticker symbol AF. This is a more specialized segment of the Nasdaq, often home to smaller and mid-sized companies. Their common stock is the security involved in these warrant exchanges. Now, looking at the broader picture, this warrant exchange really tells us something about the company's current situation. By significantly reducing the exercise price of these warrants, Firefly is essentially saying they believe the current stock price is still below what they expect it to be, or they need to incentivize immediate cash infusion. They are trying to unlock capital that might have been sitting dormant. The key risk here is whether the company can actually grow its stock price to a level that makes exercising these new low-priced warrants significantly profitable for the investors, while also generating value for existing shareholders. It is a delicate balance. Are they just trying to get some cash now, or do they have a solid plan to drive significant stock appreciation? From a Warren Buffett perspective, we're looking for companies with durable competitive advantages and strong management. While this filing doesn't give us a full financial picture, this warrant exchange suggests a company that is actively managing its capital structure. The move to a $0.5 exercise price could be seen as a sign of confidence in future growth. Or it could be a sign of desperation for cash if other funding avenues are limited. What we really need to see is how this influx of cash, if received, is deployed. Is it going into R&D that will create a new breakthrough, or is it just plugging operational holes? The success of this maneuver hinges on the company's ability to execute its strategy and deliver on its promise of future growth. Alright, that is our breakdown of Firefly Neuroscience's latest filing. What is your take on these warrant exchanges and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.